Hello friends, welcome to your channel FINOMENT. Today we will be analyzing the income statement, that is profit and loss statement. We have already made a video on how to interpret the balance sheet. If you have not watched it, just check out the I button and watch out the video. Now let's start how to analyze the income statement. So on your screen it is format of the profit and loss statement, on the top of which we have to write the company name or to which company it belongs to, and the word statement of profit and loss for the period is to be written. That is, normally it is prepared for the one fiscal year, that is from April to 31st March. On the first column it is particular, all the content will be written here. Note number will be annexures, will be attached to the main P&L account. On the first column will be the current year's figure, and on the last column will be the previous year's figure. So first will be we will discuss each and every point in detail. First we will go through the format. First A part will be a revenue. Revenue means sale of the company. Second, in A part there will be a two sub part. First will be revenue from operation, that is sale from its main business. Then second part will be other income. In the B portion it is expenses. In that, first part will be applicable to those who are engaged in the manufacturing business, that is cost of material consumed. Second will be purchase of stock. Third will be changes in the inventory. Next will be employee benefit expense. Next, financial cost. Then next is depreciation of and amortization expense, and last will be other expenses. That will be a total of expenses. Then after that it will be a profit before exceptional and extraordinary item. Then exceptional item and extraordinary item, if any, will be deducted, and we will get G part, profit before tax. And from that, tax expenses like current tax, deferred tax, any MAT credit if any available, that will be subtracted, and finally pure net profit after tax will be available, and finally EPS, that is earning per share, will be calculated. Now we will discuss in detail one by one part. That is, first part will be revenue from operation. Normally revenue is called as, in technical language, top line. Top line means sale of the company. The company which generate the sale from its main business, that is core business, is called as a sale. We will take one example. For example, company engaged into selling of paint. That is, if company is selling a pen for rupees 1 pen sale price is 10 rupees, and if the company is managed to sell 10 lakh units in complete financial year, that is April to March, then the total sales of the company will be considered as 10 rupees into 10 lakh will be 1 crore. So the revenue from operation will be 1 crore for the year. Then next part is other income. Those incomes which does not belongs to the company's main business will be called as other income. What will be the company's other source of income? That is interest. If company has put an FD into the bank and on which company is earning interest, that is not related to the company's main business, so it will be shown in the other part, that is interest. If the company has invested in somewhere into the shares and securities, and on which company is earning dividend, so dividend will be shown in other income. If the company has given a warehouse or building or property on rental basis, so rent on that will be under other income. If the company has invested into the stocks and shares, then if company make and sell, and on which company is earning a profit, then profit will be disclosed under the other incomes. Next, cost of material consumed. As already discussed, this point is applicable to those who are engaged into the manufacturing industry. In our example, this company is engaged into the trading, so this point won't be applicable. However, we'll discuss this point. Is purchasing the raw material, then whatever cost is paid by the company for acquiring the material will be shown under the cost of material consumed to produce a final product. And next will be purchase of stock in trade. In our example, pen, company will be purchasing the pen and will be selling, so purchase of stock, that is pen, will be come under purchase of stock in trade. All the purchase of final product, that is finished good, that company buy towards conducting this business will be shown under the head purchase of stock in trade. The next is changes in inventory. Inventory means stock of the company, that is stock of the company in our example is paints. So closing stock will be subtracted and from the opening stock, and net of the inventory will be shown under the changes in inventory head. The next is employee benefit expenses. Of course the company is engaged into the big business, so they must have employed the various laborers, workers, employees. So company will be of course paying the compensation to these workers, labor and employees. So any compensation paid by the company to the employee for the service rendered by the employee will be shown under this head. So any compensation like salary, then wages, then gratuity, leave encashment, any incentive paid by the company, all these expenses will be shown under the head employee benefit expense. So next point is finance cost. So to run the operation, company might have taken the loan from the lenders, so on which company is paying the interest. So interest, that is finance cost, will be shown under the head finance cost head. Then next part is depreciation and amortization. This relate to the fixed asset part. That is depreciation is applicable to the tangible fixed asset and amortization is applicable to the intangible fixed asset. If you don't know the concept, just watch out our video of balance sheet, you will come to know. So tangible asset, when company purchases the tangible asset, then over a period of time use of tangible asset will result in decrease in the value. So for decrease in the value, it is called as depreciation. Over a period of time its value gets reduced. And amortization is the same, but for intangible asset it is used term amortization. Value of decrease in intangible as amortization. Complete amount is not shown. There are two methods used in for calculation of depreciation, that is straight line method and written down method. So it will be amortize over a useful life of the asset. For example, useful life of the asset is 10 year, then it will be the expense will be claimed for a period of 10 year, equally 10 year. Part is other expenses. Rest of the expenses which are not covered on the above category will be included here, and these expenses actually do not relate in directly related to the business. It is indirectly related to business, like marketing expenses, then advertising expenses, printing and stationery expenses, conveyance, fuel, power, insurance. Other miscellaneous expenses will be covered under the other expenses. And after that, profit after tax and on which EPS is calculated. EPS is equal to total earning. Total earning, that is net profit after tax divided into outstanding share. Outstanding share, you will get the figure from the share capital schedule. So earning of the company against each share will be derived under the EPS formula. If you feel that video is useful to you, then please do like our video and please subscribe to our channel FINOMENT if you have still not subscribed it, and press the bell button so that you will get the notifications for the next videos. And also please comment it in the comment box on which topic you want to watch the next videos.